Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, April 26, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. But first, I want to bring your attention here to the recording from the other evening here. If you were not a part of the recording, you can watch the recording here at this link. You can see the link right here at the very top. Scroll down here and you can see click watch the recording. It'll take you to the YouTube video there where you can watch that recording. Don't forget, next week we begin live sessions for PivotBoss Masters members, April 29th through May 30th. You can learn more about that by clicking this link here. The following week we will also host live sessions for Swing Trade Pro members. If you are not a member of each, we have some fantastic deals down here for you to either be a part of one or the other, or to bundle and do both. These are fantastic deals here that anybody can take advantage of and also benefit from for a lifetime here, because this is not only information that you can use right away, but this is also ongoing education. So for folks who bought into Masters 4, 5, 6, 7, 8 years ago, this live training we're getting next week is all free. And it'll be the same thing for you next time we have live sessions, which is usually 1 to 2 times a year. So again, this is ongoing continuing education. We're going to be focusing on intraday trading next week and then swing trading the week after. So if you want to brush up on your skills and see how I approach the market, this is the perfect opportunity to do so. All right, let's take a look here at the market. You'll see we have continued to trend higher throughout the month of April. It's been a melt up month after the first strong day of the month here. We're now coming into the last few days of the month, 3 more trading days including today. We have pulled back to the 8-period average here. That's the golden average, and we continue to see price kind of pop out of that zone. We've had a minor little pullback here over the last 3 days, but it's still very, very narrow, and that could provide again one more lift to take out those highs from last fall. I mentioned before that it wouldn't surprise me if we come out here and take out those highs, get up as high as 3K, and then perhaps after that, if there's no continuation there, we could see some sort of pullback from that zone. So we still have a little bit more upside to go. This little minor pullback here could provide the juice here that we need to see some strength. So above 29.27.5 in the morning, if it starts to push through that zone early this morning, that could lead to quite a trend day up toward 29.40 and perhaps through it. So again, we'll see how that plays out. Even if we were to drop into 2900, that could still provide an opportunity for bulls to defend and return higher. So again, everything's still sloping up right now. We'll see how this plays out heading into the last day of the week. Taking a look at the NQ, very similar price action. Again, a melt up phase here, very, very bullish here overall. This one has not tested the 8-period average maybe one time this entire month. That's how strong it's been. You can see a higher value being developed for next month, and any pullback into that pivot range to begin May could provide a fantastic buying opportunity for a continuation higher. A failure to hold that 76.50 next month could open up quite a bit more weakness back toward the previous month's low, which would be 74.28.5. So again, everything's still looking strong right now on an intraday basis. Keep an eye on 78.20, 78.15 right in that zone, because if price starts to push above that area, we could start to work our way back toward the previous session's open and close, or open and high. All right, let's take a look now at crude oil. Now this one is seeing quite a bit more selling pressure. I talked about the rounded top formation that had developed in the intraday time frame, including the 60-minute chart. We finally got a break down out of that range yesterday around lunchtime, and that has led to a continuation downward. This is 1, 2, 3 days of selling pressure here that we've seen, and that is about as big a selling pressure as we've seen all year for this market. We saw one bout here where we pulled back nicely, failed new low, and then took off. But that pullback was almost inside. It was basically inside the trading range. Right now we're seeing quite a bit of pullback here as well, but we still remain within the very bullish trending market. So that's exactly how each of these other days started. So if you come back here, this day began with a big down candle like this. By the end of the day, it found rejection and it closed much higher. That's rejection, failed new low, and that led to a pop higher. So again, is that what's going to happen here today? Are we going to see some sort of major rejection down here below 64s that leads price back up? If so, closing back above the midpoint of the day will be very, very bullish and could lead to quite a bit of strength here down the road. Again, we are dropping right into the PIMA trigger zone here, and we have prior lows at about 63. I mentioned before, if we take out these lows at 62.70 to 63, that could provide the next buying opportunity for bulls. I mentioned that yesterday, that if price comes into about 64.75 to 65, that could be an area for bulls to defend. If not, then the next zone is going to be between 62.70 and 63. We'll see how that plays out. But right now, clear selling pressure in crude oil. That suggests more weakness until we start to find some sort of significant rejection at the lows. If we do, that could provide a pretty meaningful bounce opportunity at some point. Again, what we're looking for is something like this or something like this. And if we get that type of rejection, there could be some more strength to come. Again, after getting this breakout from this narrow 10-day range, the expectation was for a range of about 6 handles. And we just put in a high at 66.60, so that could take us down as low as 60.6 if that range came out to the downside. So again, we're trying to see how this plays out here heading forward, but overall we need to see if rejection occurs first at this low. So taking a look at gold now, you'll see how this is playing out over here. Gold has popped higher out of that narrow range. It's trying to test prices above 1280 right now. It's at 1281. I mentioned last week after this thing closed down that if we push down a little bit, any pullback toward about 1290, which is value, could be defended by bears initially for a shot lower. That's currently playing out a little bit here as bears defend the previous session's high. You see a failed new high, rejection, and now price pulling back. But day over day, it's still higher highs and higher lows. So right now it is a near-term uptrend, despite the fact that it looks like a lower high developing. So again, it's still anybody's ball game here for the bears or bulls. Bears trying to keep the 1280s, 1290 zone offered for a shot at continuing this thing down. Bulls trying to push price back above 1285, 1290 to open up a rally back toward 13.15 and even as high as 13.25. All right, let's take a look now. I want to look at one more thing here. This is RTY. RTY has been a leadership type of index for a while. Obviously, it had early warning signs last fall. It was a huge move downward. This one hasn't popped as high as some of the other ones. We have the NQ at a new high. You have ES, within a stone's throw of a new high. This one is sitting right at resistance here. You can kind of see an inverted type of head and shoulder type of pattern developing. This is a very narrow range here that's playing out. So the looks of the Russell here suggest that we could be looking at a major breakout opportunity very, very soon. It's an ascending wedge here, which usually breaks to the upside. It could be very, very powerful if it gets above 1600. Above 1600 will rally this thing back toward recent highs at 1700, 1750. Any failure to get above 1600 could easily return price back to 1500, which is the other side of the range. So again, right now we are coiling up, compressing significantly. 1600 is very, very important. Any rejection here, I think, suggests a major return back to this previous low at 1500. If it bursts through 1600, then 1700 could be the next one up. So we could be looking at a 100 handle move pretty soon after this thing has developed a 100 handle compression that is now compressing to the apex. Remember, compression leads to expansion, and expansion leads to compression. So we could be looking at the next phase here after this breakout occurs. So keep an eye on RTY. It could give us some very big directional conviction down the road. All right, that is it for now. I'll see you in the trading room. Have a fantastic weekend, and I'll see you soon. Take care.